Let's look at the stock market. Take a look here as we switch over to the SPX. So the stock market has been incredibly resilient, and the declining phase that we're looking for has been non-existent. We had only a 3.6% decline right in here. I have some people writing me that that's it. That's the whole decline, everything we were looking for in here, which was as much as 11% down, or a minimum of 11% down, and then upgraded it to 5.3 to 7.7% down. Well, they're saying that that's not going to happen. We actually saw it in here. It's going to be moving up again. I would rate that as an incredibly low probability, and the highest probability being that we've got 2 or 3 weeks on the downside in here, and then beginning to move up again after that and make some kind of a complex bull market peak somewhere out over here. So the when I look at the patterns in the mega caps, which have really held the market up, those have corrections due right now. And if you look at, if you're a level 3 or 4, you can see our Apple analysis, which is calling for a decline over the next month, and Google's the same thing, and Amazon has already had a breakdown. Facebook a little bit different, but these mega caps are really pointing to corrections out here into late August, and some of them into September. So I'm reluctant to push this date out anymore for a correction in here, because people start writing me and say you're moving the goalposts. I don't move the goalposts. The market just simply tells us what the conditions are, and we reflect that back with the highest probabilities based on all the data. So right now, the correction is due. The mega caps correction is due, but in this earnings period, we've been moving only sideways. The last 9 days, and I'll go over to the daily chart right over here, has moved in a very narrow range, and you can see in these complex structures right in here, it's riding the top channel. Momentum has been strong. The PO giving you signals on the bottom that have been bullish. All of this has been, positive, and we've continued to reflect that we can only anticipate that a correction is due. We can't make it happen. And when you're looking here at all of the good earnings that have come out for this last week and a half, 2 weeks, well, the stock market has only been able to move sideways in this narrow range. That may be an indication that this period over here is going to give you the bigger declines. You can see that this one was only 4 days long and is not what I expected. I expected something more like this one over here, which was 3 weeks long. Right there, and ultimately ended up with some big selling. But look in here how this was back last February, where you had a similar period in here where for around 10-11 days, all it did was chop in the fib extension zone, and then all of a sudden it had like a week and a half where they really started to sell them. Here you can see almost the same thing going on, where it's chopping sideways in the fib extension. And this week and a half in here to the downside may be everything that we see right there. This next cycle out over here, this low times with a lot of the mega caps out over here, and where their cycle lows are due. So that's why I say, there's a potential that this could come out longer, but I don't really want to say that yet because of the criticism that comes out when we adjust. The whole correction could come in the next week and a half or 2 weeks, and that might be all of it. So we're not exactly sure. We just know that we're in this period of risk where it is likely to happen. So our projection, a worst case that we're looking for right now, is 7.7% on the downside, and it should happen very soon.